Let's take a look at what's happening with Beyond Meat's stock. Is it facing a fate similar to AMC's, which surged by hundreds of percent afterward? We'll definitely examine the volatility and whether there's a chance of reaching $100. I'll explain that, and of course, I'll share how you can profit from it. The strategy is actually quite simple, and anyone can make money regardless of whether the stock goes up or down. We'll also check the probability distribution profile, which of course isn't straightforward. The profile indicates a strong downward trend, or perhaps the options market is mistaken. We'll explore that, as well as the volatility smile. As we can see, there's a significant skew in volatility towards call options, which is an important signal. So let's start from the beginning. Right now, in pre-market trading, the stock reached nearly $9, but has pulled back slightly. That still represents almost a 100% increase. What happened? The stock nearly went bankrupt, dropping to 50 cents, and then following some news, it began to rise dramatically, with volumes increasing significantly. If we look at the pre-market volumes, we can see they've already surpassed yesterday's levels, or are very close to doing so, which suggests further growth. Now let's quickly run through the news, although they aren't as crucial. In short, the company has struck deals with Walmart and is preparing to launch new burgers. There were also updates regarding convertible bonds, which are important, but the key factor is the short float. How much of the stock is shorted? This is reminiscent of AMC, which have already seen explosive growth. While others wait for a new short squeeze on AMC, that stock continues to decline. This is where you should be looking, my friends. 62%. With good news, excitement, and Reddit buzz, the stock can catapult upward. So where might it go? Let's break it down step by step. Starting with volatility, Beyond Meat's volatility has always hovered around 100%. For companies like this, that's quite normal, but then it starts to spike. Volatility jumped on October 10th, coinciding with a 60% drop in the stock, leading many to believe it was heading for bankruptcy. Then volatility stabilized, and we saw a significant increase, with some strikes reaching 700%. That's a lot. The volatility smile shows that volatility is currently skewed towards growth, favoring call options. Typically, puts are more expensive than calls because people hedge, but not right now. At the moment, call option volatility exceeds that of puts, which is risky. Sooner or later, volatility will revert to normal levels. Yes, the stock might still surge a bit more today, possibly reaching $10, but eventually everything will settle back down. Next, we need to examine the probability distribution profile, which indicates where the market expects the price to land. As of now, the options market suggests that by October 24th, the price will be around $2 to $3. This indicates that the options market is going against the crowd, but keep in mind that these are global players and funds, and they can be wrong too. Let's consider what happens if the price closes at $10. We can build a small model to see that volatility would likely drop significantly. This is interesting, and we should pay attention to it. When the market opens, the data will update, and we can dig deeper. If the price stabilizes at $10, we might see unexpected shifts. Looking at the options market, the maximum strike is $7, $50, and it seems they're starting to add more. Earlier, there were no strikes at $5 or $2, but they're catching up. The further out the expiration date, the more strikes are being added, with some reaching $30 and $40. The market is lagging behind real events. I doubt we'll break $7, $50 today, but we could see a rise to $10, which isn't a problem for a stock like this. However, we might close below $7, $50. Why do I think that? Because there are still no options available. And while there's some momentum in the options market, they haven't been added yet. When they are, the situation could change rapidly. Now let's check the pre-market and volumes. The trading volumes are massive and increasing daily, similar to what we saw with AMC on that fateful day. The pre-market volumes are already close to surpassing yesterday's record levels, which is very interesting to observe. But my friends, be extremely cautious. I can see the stock exceeding $10, but you need to tread carefully. I'll explain how to navigate this drop or rise effectively. You can profit either way, but first, let's revisit AMC. Is it possible we could see something similar? We might be at a point where we rise, then consolidate, and eventually surge to $100. Yes, that's entirely possible. News will play a role, and we need to keep an eye on convertible bonds and voting outcomes. Remember, AMC shares soared to $400, and at one point, they were valued at $800. I remember that well because I capitalized on that volatility. So, how do you play this? It's simple, my friends. No matter which way the stock moves, I guarantee that volatility will drop. I suggest not buying or selling shares, but rather selling volatility. That's the market law. Volatility tends to decrease. Yes, it's challenging to capitalize on falling volatility. You need serious tools like options. But if you want to earn real profits, you need to use these sophisticated strategies. If you find this strategy complex and just want advice on whether to buy shares, I'd recommend stepping away from all positions in Beyond Meat right now. Yes, that might sound harsh, and some may close the video, but my job is to tell the truth. If you're just buying and selling without understanding why, it's like gambling. Take a moment to step back, breathe, and educate yourself on the math and formulas involved. If you struggled with math in school, that's a problem. You'll need to revisit those concepts because trading is fundamentally about probability. I've always said you need to look at statistical data and the likelihood of profits or losses. The odds are not in your favor, regardless of where you place your bets. You need a clear plan. Right now, I'm out of positions. I'm not interested in profiting from the stock's rise. I profit from volatility, either its increase or decrease. Some may say you could have bought options early on, and yes, they would have skyrocketed, but they would have done so not just because of their intrinsic value, but also due to volatility. That's crucial to understand. However, time is running out, and it seems there's no point in buying options now. True, but you can still capitalize on falling volatility. This is where the real opportunity lies. No one ever knows when a short squeeze will start, but if it has already begun, you can play it by selling volatility. That's what I always do. I wait for a stock, and if I want to capitalize on a short squeeze, I might wait weeks or even months. Beyond Meat has come onto my radar. Sure, I missed the initial surge, but now I'm ready to take action. Volatility is crucial when building option strategies. I'm prepared to navigate this carefully. You need to monitor your portfolio and margin support. If you're short on margin, you should buy or sell hedge options, rolling them over to the next week or adjusting strikes. This is complex and requires experience. If you understand this, you won't panic or feel FOMO, fear of missing out. I don't feel that way because I know I can't predict the next big move. I'm honest about it. I can't guess where Beyond Meat will go next. I didn't predict this one either, but that's okay. I need to profit, but not from the stock's rise. I profit from volatility. I know I've repeated this many times, but the more I say it, the more people will understand and remember. Let's see what happens when the market opens. I suspect we could reach $10 today, which isn't an issue. A 60% rise is feasible. However, I have a feeling we'll close below $7.50. Let's watch the opening live and analyze the first volume. Currently, we're seeing a decline and volatility remains unchanged. The market is just starting to heat up. As we can see, options haven't closed yet. I believe we'll close below $7, as that's the maximum strike for the options. We've seen a significant gap and we'll definitely close it. Though I'm not saying it will happen today. Sooner or later, it will happen. The decline has begun. We might be at a point where we've jumped up sharply, and after a pause, we could surge again toward $100. Anything is possible. I'll keep you updated, so stay tuned for more information. If you have questions, feel free to ask. I'll be recording more videos on this stock. By the way, if we look at the broader market, it's correcting nicely, but I don't think it's related to Beyond Meat. I've heard theories that margin calls are causing a market sell-off, but we'll see. Last time, the short squeeze did trigger a market sell-off when GameStop and AMC stocks skyrocketed, but I don't think that will happen this time. Let's not drag this out. If anything interesting happens, I'll record a new video. If you're interested, I can show you how to manage these positions effectively. Volatility has already risen to 900, and it's continuing to climb. We need to keep a close eye on it. Currently, the probability distribution for volatility is changing. The market is pricing in a $3 price point. There are two scenarios. The market believes the stock will be at $3 by the end of the week. We'll see who prevails, the options market or the traders. I'll be monitoring this closely and will provide you with more detailed information soon.